and he's going to give us his thoughts on how AfDB sees private sector partnerships in the private sector participation space, and where he sees the opportunities for improvement for the DFI community.
Thank you very much. We really appreciate the opportunity to be here today. As most of you know, the African Development Bank has been involved in private sector operations, both lending and investing now for more than 15 years. But it's really been in the past 5-6 years that we've scaled it up to a very significant level. What is also particularly, though, rewarding for us is that we're seeing institutionally a kind of a change in thinking where, it's all about private sector-led, public sector-enabled growth, growth that is both green and growth that is inclusive. What we do observe, though, is that as projects get bigger and they get more complex, it does require multiple partners to make them happen. And that means, bringing in partners that have their respective sort of comparative advantages, that are able to share the risks appropriately. But that brings with it complexity. I think we have to recognize that some of the traditional financiers are going through more difficult times, whether it be the commercial institutions or even the donor community. And therefore, we are now increasingly having to focus on instruments that will help us to catalyze new sources of financing. Traditionally, we've used instruments such as the AB loan structure that would be used to provide a sort of political risk halo for a partial risk, preferred creditor status halo to commercial institutions. That's fine when the commercial institutions have appetite for long-term financing, but we're seeing that a lot of that appetite has dwindled because of the crisis. So increasingly, we're having to look for new instruments to get us into pockets of finance that were non-traditional. For instance, now we're seeing some of the pension funds that are interested in infrastructure assets, and this is now going to, we believe, is going to lead to a shift in the sources of financing. But it does create with it a number of challenges, and those investors are typically not interested in taking the traditional kind of construction risks that are associated with project finance. Rather, they're looking for assets that are up and running, are able to pay a stable return on that. So the question that I think we're looking at now is what kind of instruments could we put in place that would allow us to kind of package assets that once they have been basically seasoned and to move them on so that there's basically takeout financing. We're seeing interesting developments from a number of new players in the international arena. Japan, in the past 5 years, has shown an interesting appetite for co-financing of projects in Africa. Very recently, though, we're seeing much more interest from China, coming in with facilities that will basically take project risk, which is, again, a very interesting innovation. We're finding ourselves needing to work with a lot of partners such as MIGA, World Bank, ATI, and others to bring in specialized instruments to take on certain types of risks that would normally, we were able to mitigate in other ways, but now are requiring those specialized institutions. So all of that means more complexity. Trying to coordinate all this is a challenge for all of us. I think many of you will have seen an announcement in the press from President Kaberuka about a large infrastructure bond. I think essentially the objective there is that African central banks are sitting on a tremendous resource that is invested in high quality government debt, most of it U.S. Treasuries, European debt. And the question is, how would we be able to tap into some of those resources? What kind of instruments could we put together to be able to even get a small slice, a few % of that, because then Africans could be financing some of their own infrastructure and their own development projects. And that's something that we'll be looking at over the course of the next few months to see if we can come up with some innovative solutions on that.
Doing business in Africa. You can't afford to be without Africa Investor.